Have you heard the many good things about infinite banking but find it confusing? You may not be alone. If you know what a HELOC is, you'll understand infinite banking. A HELOC is a bank home equity line of credit. 50% of all mortgage holders have a HELOC. A HELOC allows you to access the equity in your home without interrupting its asset growth potential, to take advantage of what Albert Einstein says about compound interest, the eighth wonder of the world. Infinite banking, in comparison, does the same thing, only it's called a life insurance company line of credit. So how are they the same and different? Well, let's look at assets first. A HELOC uses your home's market value as an asset that secures a bank line of credit, whereas infinite banking uses your high return life insurance policy cash value as an asset that secures a life insurance company line of credit. So both require an asset to pledge as security. 2, asset growth. Your HELOC upper limit is based on your home's market value. Its value, however, does not always increase. Sometimes it drops. And when it drops, so does your bank line of credit upper limit. Not very convenient when you may have already maxed it out. If that happens, you need to find cash to pay it down quickly. If the reason that you've maxed it out is because of financial difficulties, you may not have the ability to find the cash. In comparison, infinite banking life insurance policy cash values are always increasing, which means your life insurance company line of credit upper limit always goes up. It never drops. How nice is that? 3, payments. With a HELOC, you make mortgage payments. With infinite banking, however, you make life insurance premium payments into the new high return life insurance policy, which is not really a payment, it's really savings. You get to decide the amount. Both require you to allocate money toward them. 4, access. With a HELOC, you borrow up to 80% of the home's market value less the mortgage from your bank line of credit. However, it is subject to credit approval, so there's no guarantee you will qualify. However, with infinite banking, you can borrow up to 90% from your life insurance company line of credit with no credit approval. 5, repayments. HELOC requires a minimum monthly payment of interest only. If you miss payments, however, you will find out who is really in charge. The bank will harass you for payments, and since they have a lien on your home, they may foreclose on you. Whereas infinite banking, while repayments are certainly recommended, a minimum payment is not required. You get to set the terms of the repayment or don't repay at all. The life insurance company will never harass you for payments. And 6, credit reports. With a HELOC, your loans show up on your credit report, where with infinite banking, life insurance policy loans do not show up in your credit report. Infinite banking is really no more complicated than that. If you still find it confusing, connect with IBCanada Group, Canada's most experienced infinite banking financial professionals.